Outside forces can have extreme impacts on the electric industry. COVID-19 has shown Basin Electric and its members how a global pandemic can affect electrical load, oil production, and the economy. With states in our service area starting to open up, how long will the economic downturn last? Robert Johnston, Executive Advisor and Managing Director of Global Energy and Natural Resources for the Eurasia Group, gave his insights to the board.
Carbon neutrality and net zero is the only pathway that works for oil and gas, right? And the reason it says 100% clean energy means that you're including carbon neutral oil and gas, or coal even. It's not 100% renewables. It means that you can have, as long as your oil, gas, or coal is carbon neutral, which means either you have carbon capture and sequestration, or you have offsets, then you're still, if you have those two, then you're part of a carbon neutral strategy. So that's a big difference, right? There's some in the Democrat Party who want 100% renewables. Biden's saying no, 100% clean energy and carbon neutral, meaning yes, you can have oil and gas and coal if you have CCS or if you have offsets. So what are the offsets, right? Offsets, of course, could be biofuels. They could be reforestation projects, so-called nature-based solutions. What I find interesting, and I've discussed with some of you, is that I think your region is perfectly suited for all this, right? That think about that if there's a national demand for offsets from the entire oil and gas industry, you guys have it. You have the land, you have the wind, you have the solar, and you have the sequestration.
The November presidential election is another variable that the electric industry is watching.
So what about oil prices? The questions I mentioned earlier, $40 a barrel, is that a ceiling or a floor for prices, right? Is there more risk to the upside or downside at this point? If you look at the futures curve, as shown on this chart, you can see that the market's still only pricing in kind of a $45 a barrel price, even in 2022 and 2023. So for your region, right, in the Bakken and the Williston Basin, is that really a strong enough price signal to get production back to where it was, 1.5, 1.6 million barrels a day, say in fourth quarter 2019? Probably not, right? But it's also a better scenario, and your sort of top quartile producers will be okay in this price environment. But it still generally speaks to an environment of constrained capex, reduced drilling activity, but not at the sort of catastrophic levels of April, but sort of a very slow recovery from those levels.
Johnston says the nation's move toward carbon capture and utilization sequestration has a potential to present an opportunity for increased revenue for the fertilizer plant at Dakota Gas.
Part of the CCS strategy and decarbonization strategy includes CCUS on fertilizer production as well. And there's a big project in Indiana being built. And this gets to the point of, is there a competitive advantage, both in raising capital and with consumers, for developing a net zero fertilizer product, right? Being that it's like sustainable forest products or fisheries, right? If you have the sustainable fertilizer or net zero fertilizer, carbon neutral fertilizer, you will probably get a premium in the market from that. A lot of the big agribusinesses, the publicly traded ones, will be under pressure to decarbonize their whole supply chain. ADM, Cargill, those types of companies, Nestle. So they're going to start buying as much as net zero fertilizer as they can, because they have to show their stakeholders and regulators that they're carbon neutral on their whole supply chain. So I think that'd be an interesting opportunity to explore there as well.